Welcome back to my channel. Last Friday, my QQQ cash secured put expired in the money and I was assigned 100 shares at $516. But instead of managing the trade, I spent the day at the North Carolina Museum of Art in Raleigh because when you trade cash secured puts, you can plan ahead and take a day off without stress. I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals, here with another weekly QQQ trade update. When I sat down to manage the trade today, I had a decision to make. Hold the shares and sell a covered call at $516 to start wheeling, or unassign the shares by selling them and reestablishing a new cash secured put. Now, QQQ is hovering around $480 a share, which makes this decision even more interesting. Both strategies had pros and cons, and I went back and forth before making my move. Want to know what I chose and why? Let's break it down. I have a choice to make. I can hold on to these shares and wait for the price to recover. And while I wait, I can sell a covered call with a strike price of $516. But I have another option available to me. Rather than hold on to the 100 shares that were assigned to me last Friday, I can sell them for about $3,600 less than I paid for them. And then I can sell a cash secured put that brings in at least $3,600. That reestablishes the position in the place it would have been if I had rolled it last Friday. So let's do a little comparison of the two choices I have. If I hold on to the shares, let's see how much income I could generate while I wait for the share price to recover. I'm going to start by looking at March 28th. It's 11 days from now. It'll be 2 weeks from the date that I was assigned. If I sell a covered call with a strike price of $516, I can bring in about $25 of income. The income isn't really the point, though. Mostly what I'm doing is just waiting for the share price to recover so that I can sell another covered call with a higher strike price. Let's look at the other choice I have. I could sell the shares for about $480 and then sell a cash secured put for at least $3,600 to make up for the loss in the share price. Since I have 230 shares and I really prefer to have a lower share count and be able to sell both a put and a call, I think instead of selling this covered call, I'm going to sell the shares and reestablish my cash secured put. In this order, I sell 100 shares, then I sell a cash secured put with the same strike that was assigned last Friday, and I look to bring in $516.36 a share. This would give me an extra $36 in income and create a buffer of 11 days to see which way the share price moves. Let's see if we can get this to execute. All right, this doesn't, oh, I started to say it doesn't seem to be filling, but there it did. So it filled at 516.58, which was a little better than I expected. This was kind of a complicated roll, so I want to just make sure you understand what I did. Last Friday, rather than roll my position, I took the day off and allowed myself to be assigned 100 shares at $516 a share. So today I went back and I unassigned these shares to myself. I sold them, and then I sold a new cash secured put, again with a $516 strike price. And with the combination of selling the shares and selling the new cash secured put with the same strike price, I added 11 days to the contract and came out ahead $57.34. So this line here is just a calculation to help me see what my annualized return on this new $516 put is. $57.34 in 11 days comes out to a 3.69% annualized return. So the annualized return is pretty lousy, but the point of the roll, or the unassignment, was not so much to generate a lot of income, but to create a little bit of time for the share price to recover. So I hope that happens, and if not, I'm going to keep rolling this position and wait, because eventually QQQ always comes back. And I can bring in small amounts of cash while I wait for that to happen, and I'm no worse off than I was last week. So now that I've sold this $516 put, let's see if there is a covered call that's worth setting up. My last covered call expired on Friday, March 14th. It had a strike price of $525. Let's see if I can find a good covered call expiring also March 28th that would bring in a little bit of income. If you've been watching my videos, you know that I always like for my covered call strike prices to be higher than my puts. So let's see what we can find above 516 that generates some meaningful income. There's not much here right now. I could sell a covered call at the same strike price and bring in about $22. I could go up to $520 and bring in $14 or $15. The good thing is, if this call went in the money, it would mean that the put was out of the money. And $15 is $15. It's essentially a limit order with a little bit of premium. It has about a 2% chance of being assigned. I'll go ahead and set it up just because there's no real reason not to. It filled at 16 cents a share. On March 3rd, when I owned 130 shares, my average investment per share was $419.43. I was assigned at $516, which brought my average investment per share up to $461 per share. And by selling those shares and reestablishing the cash secured put and selling another covered call, I brought my average investment per share down to $418.87. And I have 130 shares in this position rather than 230. So we'll check back on Friday, March 28th and see where things stand and make some more adjustments.